Good morning. Into Friday, the story has been one in which the pound has outperformed as it feels increasingly optimistic about the Brexit outlook. The euro has held up very well, and the commodity currencies have been going the other way, seemingly on concerns about global risk appetite and weakness in the commodity sector. This has left the US dollar under pressure on one side and in demand on the other. Overall, however, the US dollar isn't looking great when considering the bigger picture themes. US tax reform has been a big supporter of the buck, and yet the dollar hasn't been able to do all that much with this risk that has been priced in ad nauseum over the past several months, leaving room for either a sell-the-fact reaction once through or an even more aggressive deterioration if there is any letdown. Today, the focus will be on tax reform yet again, as the market watches to see how the Senate floor vote goes. It is expected to pass, though there are still some holdouts. Still, we do not anticipate the buck gets much more from this risk, especially with U.S. protectionism and soft dollar policy coming back into the spotlight in 2018. But the market has really been consumed with all things stocks and Bitcoin this week, both making fresh record highs with a statement. U.S. equities extended their charge on Thursday, while Bitcoin took a breather after crushing through 10K and 11K on Wednesday. We continue to warn both equities and Bitcoin are severely overextended and should soon go through periods of significant corrective weakness. Earlier this week, we pointed out the rallies in these two markets are similar in that both rallies are a product of excessive central bank monetary policy accommodation that has ushered in a new world investment model of riskless investment in risk assets. Investor mentality has been so warped by central bank proponomics that they now believe they are immune to any and all downside risk. But this, of course, is not the case, and the end of policy accommodation and shift to policy normalization is one of those things that will shock the market back to earth as it is weaned off its near decade-long addiction to the stimulus drug. At the moment, U.S. tax reform is perhaps clouding the market's ability to see things as they are, but all of the writing is on the wall and the story does not end well. Just think big fire, millions of people inside, and one exit door. Looking at today's calendar, we get some Eurozone and UK manufacturing PMIs, Canada employment and GDP, and US ISM manufacturing. But again, it will be the big picture stories that command most of the attention. US tax reform updates, Brexit headlines, European politics, and geopolitical tension will all be monitored closely. We will remind that as far as Brexit optimism goes, the UK will still need to iron out a solution with respect to Northern Ireland in order to be able to formalize this stage of negotiations and move on. This is the one sticking point that could unravel the pound, at least for a moment, if not figured out between now and Monday. That's all for now.